Washington, Reuters, U.S. factory activity slowed in January amid a fall in new orders, but an unexpected drop in the number of Americans filing for unemployment benefits last week pointed to sustained labor market strength that should underpin domestic demand. The Economia Euro trademark's healthy fundamentals were also underscored by other data on Thursday showing a solid increase in construction spending in December. A decline in worker productivity in the fourth quarter, however, suggested it may be hard to maintain the strong pace of economic growth. The Federal Reserve on Wednesday described the labor market as having a euro continued to strengthen a euro and economic activity as a euro rising at a solid rate a euro. The U.S. Central Bank left its benchmark overnight interest rate unchanged. U.S. financial markets are expecting a rate hike in March. A euro demand is there, but manufacturers are struggling to keep up a euro, said Jennifer Lee, a senior economist at BMO Capital Markets in Toronto. The Institute for Supply Management, ISM, said its index of national factory activity fell to a reading of 59.1 last month from 59.3 in December. A reading above 50 in the ISM index indicates growth in manufacturing, which accounts for about 12% of the U.S. economy. The survey Euro trademark's production and employment sub-indexes fell in January, as did a gauge of new orders. The moderation in orders is likely to be temporary against the backdrop of strong domestic and global demand. Manufacturers reported an increase in export orders and most offered an upbeat assessment of business conditions. Manufacturers of computer and electronic products said a euro budgets are being approved for new projects. A euro furniture manufacturers reported that a euro our usual winter slowdown has not occurred, and we are very busy with new orders. A euro domestic demand increased at its fastest pace in more than 3 years in the fourth quarter. A weak dollar, which lost 7% of its value against the currencies of the United States, a euro trademark main trading partners last year, is making U.S. made goods more competitive on the international market. The ISM survey also showed signs of a pickup in inflation, with a measure of prices paid by factories for raw materials increasing to its highest level since May 2011. U.S. Treasury yields rose while the dollar.DXY fell against a basket of currencies. Stocks on Wall Street were trading higher. Near full employment. In a separate report, the Labor Department said initial claims for state unemployment benefits slipped 1,000 to a seasonally adjusted 230,000 for the week ended January 27. Economists polled by Reuters had forecast claims rising to 238,000 in the latest week. Last week marked the 152nd straight week that claims remained below the 300,000 threshold, which is associated with a strong labor market. That is the longest such stretch since 1970, when the labor market was much smaller. A euro untapped reservoir of unemployed or underemployed skilled workers that existed in the aftermath of the recession has largely disappeared. A euro, said Jim Baird, Chief Investment Officer at Plant Moran Financial Advisors in Kalamazoo, Michigan. A euro employers are finding it more difficult to find potential workers. A euro. The labor market is near full employment, with the jobless rate at a 17-year low of 4.1%. A tightening of labor market conditions has raised optimism among Fed officials that inflation will rise toward the U.S. Central Bank a euro trademark's 2% target this year. The claims data has no bearing on January euro trademark's employment report, which is scheduled to be released on Friday, as it falls outside the survey period. According to a Reuters survey of economists, non-farm payrolls probably rose by 180,000 jobs in January after increasing by 148,000 in December. Skilled worker shortages and weak productivity could put pressure on companies seeking to expand their businesses, economists say. That could spur corporate investments in automation to increase efficiency and output, according to Plant Moran Financial Advisors Euro trademark Baird. In a third report on Thursday, the Labor Department said non-farm productivity, which measures hourly output per worker, fell at a 0.1% annualized rate in the fourth quarter. That was the first drop and weakest performance since the first quarter of 2016 and followed a 2.7% pace of increase in the third quarter. Compared to the fourth quarter of 2016, productivity increased at a rate of 1.1%. It rose 1.2% in 2017, the fastest since 2015, after dipping 0.1% in 2016. Soft productivity suggests it would be hard for the economy to hit the Trump administration Euro trademark's 3% annual growth target even with the $1.5 trillion tax cut package passed by Congress in December. Gross domestic product rose 2.3% in 2017. Weak productivity and slowing population growth is not a recipe for success when it comes to the story of sustainable economic growth of 3% in coming years, said Chris Rupke, chief economist at MUFG in New York. It is looking more and more that the productivity trend will make it impossible for those $1.5 trillion of tax cuts to be paid for by faster economic growth that improves incomes and leads to greater tax revenues. Unit labor costs, the price of labor per single unit of output, rose at a pace of 2.0% in the final 3 months of 2017 after slipping at a rate of 0.1% in the third quarter. They gained 0.2% in 2017, the smallest increase since 2010, after rising 1.1% in 2016. A fourth report from the Commerce Department on Thursday showed construction spending rose 0.7% to an all-time high of $1.25 trillion. It advanced 2.6% on a year-on-year basis.